What is a no closing cost mortgage? Hey guys, my name is Sandy. I am going to do a video today on what is a no closing cost mortgage, which is a big deal because every mortgage comes with closing costs. So most of your closing costs when you buy a home will be mortgage related. If you're not getting a mortgage, then you'll probably have very little closing costs. So a lot of times when you want to figure out why is my closing cost so high, you got to talk with your lender because that's where most of the closing cost is coming from. With the exemption of transfer taxes and your title report, the next big thing is going to be closing costs, which comes under appraisals, home inspection, all that great stuff, everything that it takes to close on a home. So how do we get to a no closing cost mortgage? So mortgages have a lot to do with rates, and different lenders always have different programs based upon what you qualify for. You can go online and you could, put in a certain price in a online calculator or put a certain interest rate and it might pop out a monthly payment, but that's just an estimated thing. So you always want to speak with a loan officer as to what the actual number is that you need to get to. Now, you can always buy down rates, right? So in this market, we're in June 9, 2025. I want to make sure I have the correct date. And in this market that we're in, interest rates are still kind of high. People are still trying to buy the interest rate down. So you could buy the interest rate down, and based upon your lender, they might say you could buy 1 point down. 1 point is 1% of the amount that you're borrowing. So you could buy 1 point down, you could buy 2 points. If you can't afford to buy it, you could probably buy a 1/4 point down. Anything you're buying down is going to add to your closing costs. So any kind of buy down mean higher closing costs. So whenever you hear of a buy down, you want to sit down with your lender and figure out, okay, if I buy down by 0.50%, what is that going to cost me in my closing costs? Because obviously it's something, there's a money there that you have to pay to buy that down. You're buying something down. That's going to either be cash you got to bring to the table. Well, you're going to have to bring to the table anyway, but it's going to increase your closing costs. Now, how do I get lender's credit? Because lender's credit is what we want to look for when we're talking about no closing cost mortgages. So what are lender's credit? Lender's credit can be many different things. It could be that your particular lender wanted to get a certain amount of mortgages done that month and they offer a certain lender's credit based upon your credit report. They might have some criteria like, okay, so for borrowers who have this amount of credit score or are going through this particular loan program, that lender might say, okay, so we're going to do a certain amount of lender's credit for that particular program. For an example, if you're doing an FHA loan, FHA will allow you to get at least a 3% concession from the seller. They go up to 6%, but a lot of times I see 3%. Technically, legally, you could get 6% seller's concession on an FHA loan to cover all your closing costs. But more than likely, you probably won't get that realistically. You might get 3%. Also, just like how you could buy down the rate, you could also buy up the rate. So if you're buying up the rate, or if you're getting a higher rate, you're going to get lender's credit because the lender is going to get more money because you're spending more money on the loan. You're saying the interest rate is normally 6. How about if I get that 6.25? Well, how much lender's credit would I get if I went 0.25, a 1/4% up, right? So if you go up on the rate, you're going to get lender's credit. If you go down on the rate, you have to buy that down. Okay, so you understand that, right? So based upon how much lender's credit you want, you could always go up. So the thing about it is though, okay, if I go up by 0.5% and I'm getting this amount of money, like let's say 5,000 as an example, 3,000 as lender's credit, and maybe I could go back to the seller and they could give me 3% or whatever it is. That's where you get a no closing cost mortgage, because the more concessions that you get, the least amount of money you got to bring to the closing table. And the only people that could help you with the no closing cost mortgage is going to be the seller of the property and also the lender. Now, a lot of times, that's why a lot of times in new construction in particular, because the builder is giving the lender so much business, they'll do all kinds of different credits with them. That's why a lot of times the builder will tell you, we'll pay the closing costs, or we'll pay most of the closing costs, because they're doing so much loans with this particular lender that they can afford to give them these kind of credits. So you're getting lender's credit, or the builder might take a cut. The builder might say, you know what, we really need to sell 20 homes this month, So we're going to internally take $20,000 off of the price, but you don't know that. So let's say you're buying a home for $450,000. The builder is going to probably put that $430,000. To you, it's $450,000. To the lender, it's $430,000. So that you get a $20,000 difference in price, almost like a seller's concession. So when they do the paperwork on paper, it's going to say the property is at $450,000, but $20,000 is going towards the closing costs. So you're financing $450,000. $20,000 of that $450,000, like a seller's concession, is going towards paying your closing costs. The lender might also have a program that says, okay, builder, since you are giving us so much loans, and we did so much loans this month, maybe next month we're going to have an incentive where our company will pay a half a point down for the buyer. But they have to have a certain amount of credit score. They have to have a certain credit score because they don't want to give it. They don't necessarily want to do that for high-risk buyers, right? So high-risk buyers are going to be buyers that their credit score is not that great, their income is not that great, and they're kind of struggling through to try to get the home. So those are going to be higher risk, as opposed to someone with a higher credit score that have more money to put down, like 20% or more. So that's the difference. So to get a no closing cost mortgage, the lender and the seller got to be working alongside you. The lender or the seller could give credit, or both of them could also give you credit. So the lender could be giving you credit, the seller could be giving you credit. This happens a lot in new construction, as I mentioned before. But if you're getting credit from both sides, then that helps lower your closing costs, and you don't have to pay that much. A lot of the closing costs that you're going to encounter, the majority of it is going to be based on the interest rate, if it's going up or down. If you're buying down the interest rate, it's going to be more. If you're buying up, and you don't want to buy up too much, but if you're going up with the interest rate, then you have lender's credit. And sometimes the lenders have a credit for a particular program. Could be a FHA program, it could be maybe Fannie Mae's doing something on their own part thing for that particular time that you're buying. So you always want to look on different programs that's been offered in the period you're buying in, because different lenders have different programs that will work for you and that will allow you not to have to pay closing costs. So when it comes to a no closing cost mortgage, you want to make sure you do your homework, know what programs are out there, what you qualify for. Even when you go to the lender, you want to say, hey, I don't want to have a big closing cost. I want to have the least amount of closing costs possible. What kind of credit are you guys offering to help me with this? And when you go to the buyer, the seller, you can say the same thing. Tell your agent or the seller directly, if you're not working with an agent, hey, is the seller offering, or are you offering any kind of closing cost concession? Like we need a 2% towards my closing costs or whatever it is. Closing cost concession are becoming a little bit more popular now. It is always easier to get it from a builder because they just want to sell the home, and they will do different things just to get the home sold, meaning they're more flexible sometimes. They don't want to. So with a builder, they don't want to change the purchase price, right? They want the purchase price to stay because they don't want to lower the cost of the home in the development that they're building. So they're least likely to change the purchase price, and more likely to change financing terms and incentives. That's why when you go, they'll be like, hey, it's $500,000, but we're giving $20,000 in incentives. You could use some of that towards your closing costs, or you could use it to upgrade. That's why they do it, because they would rather give you $20,000 of incentive than to drop $20,000 off the purchase price. That's just a fact. Because they start lowering their purchase price, it's going to lower the market value of the homes they're selling. And when they went to the bank to get the loan to build this community out, they're telling the bank, this is what these homes will sell for, and they have to keep up to that because they have to repay the loan that the bank lent them to build the home. So everybody's lending. The builder got to borrow money to build the home. You got to borrow money to buy the home, right? So that's how incentives work. Thank you so much for listening, guys. I appreciate you. If you need to reach out to us, our number should be somewhere here or somewhere below. Always call us. Let us know what your thoughts are on the videos that we do. And I'll see you in the next video.